The Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Hey, blockchain fans. Hello, it's your friendly neighborhood Ian here with the Blockchain Show. And what a great show we've got this week for you. I'm so glad you downloaded it. This week, we're going to be finding out about finance, money, and the crypto world and that interesting journey. And we've got Frank joining us today, who's got over 40 years experience in the financial sector. But Frank has also been looking very much into cryptocurrency. Frank, welcome to the show.
It's great to be with you, Ian, and your listeners.
Absolute pleasure. Before you start telling us, Frank, about what you're doing in the crypto space and why that's important, you've got a blog which everybody should subscribe to.
Well, I write, and my investment team helps me also write on a weekly basis, but it's called a SWOT analysis. And I look at the strengths and weaknesses of the past week, what drove countries. I cover the whole world, and then I do what economic data points coming out next week, which could have an impact as an opportunity or threat on gold or stock market or bonds. And so it's concise but comprehensive enough. And so it gives me a discipline as a money manager.
Fantastic. That's really good. So what's the blog called again?
usfunds.com. It's really easy, usfunds.com. And it's the investor alert, or Frank Talk, because you're talking to Frank Holmes. And when I go and meet really fascinating people in our industry, the crypto world, like Gabe Layden, who started Machine Zone and the Satori coin, I will write a special on meeting him and his thought processes and his visionary.
Fantastic. That sounds very interesting and something which I'm going to subscribe to after this. But Frank, now that all our listeners have subscribed, tell us about your adventures in crypto world.
Well, it was about 2 years ago. I was being, urged to get into the space, and I was looking for a new idea. I had launched a couple of ETFs. One was the first global airline ETF. This is the New York Stock Exchange, an exchange-traded fund. And I was looking at doing one in the blockchain, the cryptocurrency, a Bitcoin. And I, sent in to the SEC and sent into Canada. And I went up to visit what they call the Launchpad in Toronto, which seemed to be much more open because the Canadian capital markets were really the creators or sponsor the cannabis public funding for the cannabis business. And Toronto is also the epicenter for global mining, gold mining, iron ore, whatever it is. 60% of all financings and analysts are in Toronto. So I went to see their exchange and I realized quickly there's no way they were going to allow a Bitcoin ETF. Their concern is because of anti-money laundering laws and know your client. And the worst thing in both the US and Canada is some hacker got paid in Bitcoin and those coins showed up in an ETF. That was the basic reason why. But I had all this new knowledge going nowhere, and along came the opportunity to partner with Genesis Mining, who are the largest cloud source where you can mine through their system in the world, to create the first public company doing industrial scale mining virgin coins. And when you mine that Genesis coin, that first coin, there's no AML concerns. In fact, they're more valuable. So that also intrigued me. And we launched it about 18 months ago. It was a raving success coming out of the box. It quickly went to $1 billion market cap. Institutions gave us $200 million in the fourth quarter of 2017, and we deployed it in 2018. But all we saw was, tremendous volatility. For me, it's the fastest bull and bear market cycle I have ever experienced in my 40 years in the investment world.
Wow. And of course, does that mean that there's more risk involved?
Well, absolutely. It's a much more, when you go into new ventures like this, is speculative investing. Our regulatory world seems to be more keen on that speculation should be at casinos and buying lottery tickets, not on new coins or new adventures. And so you're seeing a shrinkage in capital funding outside of Silicon Valley, where the retail investor or that accredited investor can speculate on the creation of a new technology or a new coin. And I think that was the big wake-up call where I saw all these new ICOs coming out and basically usurped $5 billion of new money went into these coins that would normally go into micro cap technology, biotechnology, gold mining exploration, anything that's a new or higher risk venture. And it morphed to this other place called the crypto world.
With this investment opportunity, is this something which you've moved some of your funds from traditional investment strategies to cryptocurrency? How have you managed that?
So what has happened, Ian, is that Hive blockchain was the first out industrial scale, and it captured the imagination, and it became a derivative. It became the proxy for this whole new industry. And so people that were afraid to go in at Coinbase to open an account or some exchange to open an account to trade cryptocurrency, they could buy Hive, and it became a proxy. And so what's happened is that 94% of the daily volatility of Hive is correlated to Bitcoin and Ethereum. Now, this is really important for people understanding speculation, is the daily volatility, the weekly, the monthly volatility of an asset class. Each asset class has its own DNA of volatility. And the stock market's daily volatility, 70% of the time, is plus or minus 1%. So it's a non-event, up 1%, down 1%. Gold is the same as the stock market. Shockingly, they think it's more risky, but in fact has the same daily volatility. But gold stocks, biotechnology stocks, they're like 3% is the daily standard deviation. So there's much more volatility in gold stocks and biotechnology stocks and technology stocks than there are in the overall market. When you come to Ethereum and Bitcoin, this is another level of daily volatility. It's 7 and 8%. So that automatically makes it more scary for the average investor who's looking for rising gains at low volatility. That's their nirvana for them. But the reality is this is a new market.
So, Frank, with the gains you can see with cryptocurrency, and this is something you can do, doesn't that mean it's going to be more risky to actually invest in crypto?
You know, Ian, in the investment world, there's performance versus risk. And risk is, you have an X and Y axis chart. And so the greater the performance, the greater the risk. And so what does that mean? Well, risk is usually identified as volatility. So historically, the greater the volatility, the greater you should be rewarded with performance. And so with that, you do an analysis and you quickly see that the S&P's daily volatility is plus or minus 1%, 70% of the time. You got to think of the movie like Moneyball or Card Counting 21, those two great movies on statistical analysis for sports and the gaming industry. You got to think about it when you look at the crypto world versus stocks. So stocks have this daily volatility of 1%, and gold is also 1%. Gold stocks are 2 to 3%, biotechnology 2 to 3%. When you come to crypto, Ethereum and Bitcoin, it's plus or minus 7% to 8% daily. So the volatility is much greater, but so is the reward, and so is the capital losses. So it's important for investors to recognize that, because that makes it more speculative.
That makes sense. It's funny you actually mentioned Moneyball, because I'm working with an organization that does the same thing for legal data and the AI side of things. It seems like AI and the use of data is going to be the new way of being a winner out there. Is this something which you could automate to take advantage of these rises and falls during the day?
Yeah, the big thing with the AI and machine learning is it's like Dr. House versus Sherlock Holmes, inductive versus deductive thinking. And so often in the financial world, people are looking at their checkbook, reconciles to a zero trial balance. When it comes to the world of artificial intelligence and machine learning, it's about statistical approximations and less errors. It's all about less errors. And that's why when it comes to voice recognition or facial recognition, these new technologies take off when there's when there's only about a 5% error of facial recognition, all of a sudden massive adoption takes place. And so you're seeing this show up in all the data sciences to try to to de-risk an adventure. I know I'm involved with this in the gold mining industry for exploration, to try to de-risk and not blow a lot of money looking for something. And I think that whole digital world, the crypto world, all this is all interrelated. And the other thing I got to meet is a young man named Gabe Layden, who created a company called Machine Zone, and in 10 years did $6 billion in revenue. And I find out that there's young men spend more money on mobile gaming than all movies and all music combined. And that's that whole new digital world. And then the applications of that, using GPU cards where they process 500 million instructions per second in 32 languages for that gaming industry. Now they're seeing the applications for smart cities. So I think there's such a fascinating for me to watch crypto mining and how the crypto Bitcoin showed you could do transactions without any fraud, etc., and no duplications, no counterfeiting every 10 minutes. You wouldn't have had the Bear Stearns or Lehman Brothers crisis in 2008 had all those derivatives been able to settle properly. And I think that's what's really caught the imagination of Wall Street, of how do they apply this blockchain, because Bitcoin is the perfect case study that it works.
Yeah, and that's a great movie, Rogue Trader, as well, which the story of Nick Leeson and the fall of Bearings, which is always a good story. So I've read a bit about what the banks are trying to do, and they've talked about creating their own private blockchain, etc. Do you think there's still a role for banks in the future, or are we going to see a change in what we understand as the banking culture?
I think there's, I sadly, believe there's some type of collusion with the G20 finance ministers against the crypto world. If you take a look at the futures market being created, that was the peak in Bitcoin. And it's so easy for the major banks to come in and suppress with their capital and not be seen to suppress Bitcoin prices. And the reason why I say this is because I was never a real conspiracy thinker till I saw what was taking place in the gold market. And there's been lots of litigation and disclosures on big central banks, Barclays, Deutsche Bank, etc., colluding to spoof the gold market, especially when there's a Chinese holiday and they're not in the market, that they would use the futures market to trigger stop losses and force it down. And then the gold market is much broader and deeper than the crypto world, and it has centuries of emotional attachment to it. Very different than the new digital world. But you can see the peak took place, and I think that these finance ministers are trying to find a way to suppress it so that they can turn around and come up with their own cryptocurrency. And there's also fear of bad actors in the industry, which to try to clean up, and there's for some reasons for regulation. But right now, that bear market is the bear market of a magnitude that I've never seen before. And what really blows me away that's positive is the laying of infrastructure by Fidelity, Goldman Sachs, money being spent on building out storage facilities and trading facilities, universities buying some of these crypto coins and putting them away. I think there's some positive notes on that. And also all over the world, they still packed. I was in London last month, and it was on a Tuesday night in the old city, which is like out of Charles Dickens' story, and rainy and very few people. And there's 80 people talking about the new Grin coin and how they're launching it, etc. So you wouldn't have that in common stocks or gold market if you had such a fall. So I think that this bear market is probably going to chase out the weak people, and when it turns, it will turn in an incredible, explosive way.
Yes, we had a guest on before Christmas, and he was saying that the problem is there's so many different coins you can invest in. People are looking for that next big thing where they can make some money quickly, and Bitcoin's not going to do anything really impressive until all those little coins go away and disappear and they run their course. A bit like with the web explosion in the early 90s. Is that something you believe as well?
I think the big difference is that a lot of this has been, which is positive. It reminds me of the Hong Kong market. The Hong Kong market is much more volatile than, say, the normal market, but it's predominantly a cash economy. The amount of leverage over there is a lot less. So whenever you have a bear market caused by 2008, where it's a debt crisis, or 97 was the Asian call it crisis, then this 98 was the Russian defaulter and their sovereign debt crisis. Those debt contractions usually take 4 years before you get the emergence of the Phoenix securities come out of it, out of the ashes. When you have something that crashes the way it's done, that it's not highly leveraged, there's not a series of bankruptcies, etc., they usually rebound faster.
I've got you. I understand. So let's assume all of the people listening have got a spare $1,000 which they want to invest, and they're thinking, you know what, this guy knows what he's talking about. What would you suggest to do with that money? Of course, we would not hold you liable for anybody losing any money. Your home is at risk if you.
No, I met with some of our institutional investors that gave us money, and they're down substantially. But they said they're very happy because we deployed the capital as we said we would, and they realized that we're trading with it. Hive blockchain technology, it's the most liquid name. On Friday, Bitcoin jumped 17%. We're up 17%. I mean, and trade millions of shares. We are the go-to stock that moves with that. So if you want to speculate in that industry, then Hive is a great candidate for you to be able to speculate. And it's a very technical driven market whereby if it makes a 10-day high, the cryptos then usually more money, or even see this in gold, piles in. If it goes above its average price over 50 trading days, then all of a sudden there's a new level of confidence and more money starts flowing in. So I think anyone that's going to speculate, Hive is a very liquid name to consider. There's other crypto miners out there, but most of them don't have our liquidity or close to it. But you have to also be technical.
Right. It's not easy to get into.
It's easy to get in,
right,
but can you live with the volatility? So you'd rather have a trend. So if it's above its average price over 10 weeks or 50 trading days, it's called, that's usually a medium-term trend. So things are trading higher. And usually that carries on for many months. Sometimes it's short-lived for a couple of weeks, but usually it's sustainable. More than 60% of the time. Vice versa, same thing falling. It can stay down for several months. But I think that's a better way to look at when it technically the coin is above its 50-day moving average and Hive is above it. Then if you're going to speculate, that's a better time. And then you want to buy it on the down days. The day you want to buy it, the windows at your back because it's above the 50-day. It always corrects because of the volatility, and you buy it. It was down 7% in a day. That's the way to trade and speculate it.
Excellent. Well, there we go. We've got a little bit of advice there from the master. And if you do make any money and you like it, then please share your stories with us. One thing I've always wondered about is how susceptible is cryptocurrency to manipulation of the price by large organizations in other countries, for example?
I think the biggest concern has been China. Truly the concern on dominance of the crypto mining, their A6 chip, the Antminer, and there's rumors that there's malware in it, just like there is in Hive, in the telecom business. So what I hear at conferences, etc., as people are doing, and same thing with Ethereum coders, etc., are doing it so they cannot be mined with A6 chips. There's such a big push to backstop that, because as you know, if they go over 50% of mining of a coin, then all of a sudden it loses its independence.
Yeah.
And that's what's really important. So I think that's been, I was amazed about how many people are doing it without saying directly I'm anti-China. They're just doing it by how they code things differently.
You're very experienced in the market. You understand crypto. You obviously read a lot and got involved with a lot of projects. What does the future bring for you within the crypto world?
Well, one of the big things is that millennials have a different set of core values than a 60-year-old guy like me. And I find it really fascinating hearing how they think about not want to pay taxes. Everything should be free, and I think that there's sort of a maturity that has to go through the industry of adapting to a global society, that ecosystem, and I think that this bear market's going to separate the wheat from the chaff, or the boys from the men, and there's going to be maturity coming out of it. And so I feel good about that. So the positive parts about bear markets is that it does only the strong survive, but also quite often they're more mature mentally, emotionally, intellectually.
It's interesting, yes. The documentary that just came out about the Fire Festival and about millennials being influenced massively just from Instagram photos makes it very interesting. And I think,
and FOMO, the fear of missing out. Wow, that's a real psychological issue, and they've got to be in the latest crypto coin because their friends are all talking about it and they're not there. Not about the legitimacy of the coin, not about the fact that it can actually become a legitimate coin. It's all about enough rumors and away they go. Yeah, I think all that stuff's fantastic to know.
Absolutely, and that must be why Kitty Coin is doing so well out there in the crypto space.
Yes.
Fantastic. That's good. So what about yourself? Have you thought about launching your own coin?
No, that's not my expertise. It's and I think from this whole regulatory world, which I have to live in and respect and function, the mining virgin coins to me was just very clean. If I got offered many times ago and buy an exchange, etc., and that's a complete different set of risks. It's very profitable margins, but I don't want to venture down that. I like the idea of mining, high quality mining business, and I think that this shakeout, those who survive, will definitely thrive in the next upcycle.
Fabulous, Frank. That's been very educational and very interesting. Where can our listeners find out more information?
You can phone 1-800-US-FUNDS, or best yet, is just log on to usfunds.com, usfunds.com, and subscribe to Frank Talk. And you will find it most interesting. And go and look up some of the cryptocurrency observations I've made, and what I write about in the space.
Fabulous. Listeners, please do that. I think that Frank's got some really good information, and I think all of our listeners will agree that you've got a very good approach to this, Frank. You're in it to try and help people understand more, and with your experience, you're coming at it from a slightly different angle from most people we speak to. It's been great.
Well, thank you.
No, not a problem. It's been great to speak to you today. Thank you so much for your time. And thank you, everybody, for downloading the podcast. Please tell your friends, tell your neighbor. And if you've bought any Kitty coin, let us know. Tell us how it's doing. Other than that, this has been Ian and Frank saying thank you for downloading the Blockchain Podcast. Thank you.
Cheers. Bye.
Thank you. Bye-bye.